When it comes to trading strategies and analyzing markets, there are a number of ways to skin a cat. Obviously, I've always focused primarily on technical analysis and then understanding the fundamentals of what's happening with markets. But on-chain analysis is a huge part of strategies used to be a successful trader in crypto. Not my core competency, but as usual, I like to bring on experts who understand what we're discussing much better than I do so that I can learn alongside you. Today, we have Will Clemente, who is going to share his ideas on how to become an on-chain analyst and trader, some of the things he's looking at, and we will obviously discuss some of the big news stories and topics of the day. You guys don't want to miss this. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and gently caress the like button. Do whatever you want. I don't even know why we tell you at this point to subscribe to the channel and to hit the like button. It feels like it's part of being in the matrix, and we need to all opt out of that habit, because if you're here, you've probably subscribed to the channel, and you're not just going to hit the like button because I told you to. Anyways, I digress. Going back to the topic at hand, as you guys have seen, we've been somewhat restructuring the content on the channel of late, trying to give a definitive structure to how it will happen. Monday, obviously, we do macro. We had Mike McGlone. We have guys like James Lavish coming up. Tuesday, traders. So it's going to be your favorite traders from crypto Twitter and beyond. Wednesday, we want to focus on-chain because obviously I find it to be a huge gap in my own knowledge, even though I follow it relatively closely. Thursdays, of course, we have our roundtable every week, and then Fridays, a review of the news. So today is the first day that we're doing on-chain, and we could not have a better guest, of course, than Will Clemente. I'm going to bring him on right now. Will, welcome, man. Thank you so much for joining.
Hey, Scott. Thanks for having me on, man.
Of course. So listen, as I've said many times, this is not really my core competency. I think I understand the basic metrics, but I also find that the way the same data, much like technical analysis, is analyzed, you can look at the same chart and get two completely different versions of what it means depending on the on-chain analyst. So I guess the first question is, where should people start? What are the most important, clear metrics they should be following if they want to understand on-chain analysis?
Yeah, sure. I mean, my opinion on on-chain has definitely evolved over time. I started following it, I would say, in 2020, late 2020. First of all, on-chain is like a very new thing. Many of the kind of backbone metrics that are used now really weren't created until like late 2018, 2019. And this latest market cycle was kind of the first one that this, I would say, new, nascent form of analysis was actually, put to the test in real time. And along the way, I think we learned a lot of things about certain metrics that do work, don't work, and the nuance behind some of the reasoning of those things. I would say, originally looking at things like, exchange inflows and outflows, things like that have definitely proven to not really have much signal as the market's gotten more nuanced. For example, you could have coins moving to exchanges that are simply just people adding collateral to a futures position, or you could have some whale. I don't know if you remember this, but going back to, I think it was February or March of 2021, the market was like super jacked up on derivatives. I think funding rates were at like 200% like annualized or some crazy shit like that. And you had this alert that went out on like a crypto quant Telegram group. And it was like $200 million or $300 million of BTC sent to exchanges. And I'm pretty sure, like, because within 30 seconds the market started dumping, I'm pretty sure that kind of catalyzed a lot of these like super long, derivatives traders to freak out and close out their positions, which kind of caused a cascading effect. When people were paying that much attention to the exchange flows, for some of these big whale guys, it was a very easy way to kind of manipulate the price. And if they wanted to, all right, let's trim off some of this, froth in the derivatives landscape. Let's go ahead and just send some Bitcoin to exchanges. We'll just leave it there until they freak out, flush out, and then we'll buy back our position, right? And so like things like that. Also the exchange outflows, they could be, simply, people moving Bitcoin to custody providers. all of this is just a point to say that, I don't necessarily think it's as simple as coins being moved to exchanges means that people are selling, coins moving out of exchanges means that people are buying. And with that, if you look at exchange flows over the last year or so, I mean, they've been perpetually down, but so has been the Bitcoin price. So I don't really think that's of much signal. Things also like, for example, I used to try to follow like the whales holdings. And the premise of that was I would look at the, on-chain addresses over, let's say like 1,000 Bitcoin, and then you filtered out some of the labeling that someone like a Glassnode had done on, exchanges or OTC desks, etc. The problem though is just you're just not capturing the nuance of, a quote unquote, whale could be, not necessarily an actual, whale. It could just be a custodian. It's just you're missing a lot of the actual labeling that you're kind of making all these presumptions in terms of those flows. So I just haven't found much actionable use in those things. Now on the flip side, what I will say that I have found actionable use in are these like relative valuation metrics. So if we look at something like a realized capitalization of Bitcoin. So this is looking at, instead of the market capitalization, this looks at the last time that coins were moved. So, let's say a coin was last moved at $1, you multiply the amount of coins that were, bought at $1 times that price instead of the amount of coins times the current market price. That would give you, you add up the sum of that to give you the market capitalization. So it's basically showing you the kind of aggregated cost basis of the market. And so you can compare that to market price and get basically like this relative valuation model. Something like that I found very useful. And then, on top of that, I'll also say that, I used to just follow on-chain partially because like from a content perspective, I felt like that was kind of my unique add to the Twitter, landscape. Sure. But in terms of like actionable trading, the way I kind of view on-chain now, it's like, it's kind of this contextual view of like the high time frame, market cycle, if you will, not necessarily something that should be used for like, a multi-week swing trade or something like that. When I get into that much granularity, when I'm trading like a shitcoin, like a sushi that I've, been like publicly, posting my thoughts on over the last few weeks, something like that, I'm mainly just watching price action. And then more importantly, in my opinion, is the derivatives landscape and liquidity. And we can get into that in a moment as well.
Sure. I love all of those takes actually, because it aligns very well with my very brief attempts in the past at using on-chain and finding that it was largely noise. And especially now the inflows, outflows, I love that you pointed that out, because I think a lot of the outflows at this point are not an indication that people are buying. It's just an indication that people don't trust exchanges as much after Celsius and Voyager explosions. Of course, we're going to see a lot of people moving their coins from places where they don't think that they're secure. I've also noticed a trend in the past that I always kind of questioned, which is that a lot of people view Bitcoin adoption through a lot of these metrics and utilize it to say that, we're getting this massive adoption of Bitcoin or any other coin. But to me, it's largely just metrics that we have more people speculating, which isn't necessarily true adoption. I don't know if that lines up with what you see, but like, hash rate going up or more wallets being open, doesn't it matter more why somebody's opening a wallet than the very fact that they might be opening it to go trade on Uniswap or something?
Yeah, I mean, I get what you're saying. I do think like though in like an aggregated context, when you see like a, multi-month uptrend and, new addresses or, hash rate ripping all-time highs, I do think that has like some signal of network growth. And we can get into hash rate in a moment. I know we were talking briefly about the miner situation, but yeah, I mean, I get what you're saying in terms of like adding the nuance there, but I would say, if you see like a multi-month trend of one of those things, I think it's pretty difficult not to say that that's like underlying adoption.
Yeah, I mean, I have my doubts that we'll ever see a meaningful drop at any point in, wallets and such, just for the nature of the market. But I do.
If I could just add, I think one interesting thing to look at is like if you look at wallet like growth in general, whether it's like active addresses or like new addresses, whatever it may be. Like the important thing for like people who are like long-term holders in crypto or whatever, these things base out higher every single cycle. So like, obviously you see like a super, high run up in the bull market, everyone's coming in because this thing's going up only. Everyone's like, all right, I don't need to get a piece. All the people that are only buying it, they have no idea what it is. They just see the price going up, right? And then what happens is like every time we go back into the bear market, sure, a lot of those like quote unquote tourists leave, but you have a fair amount of people who actually, do their due diligence on the asset, discover what it is through the price going up, which is essentially marketing for Bitcoin. It's the best marketing scheme you could think of. The price is running up. And then, those people stick around. And then what you see is every bear market, a significantly higher base in where those, measures of, network activity basically bottom out. So I do think like it's just something, I guess to note for, kind of where we are in terms of down 70% for listeners that are maybe, losing a little conviction is that, we are apparently, looking at the data now, we are, forming yet another higher low in terms of that network activity.
Oh yeah, I 100% think we're bottoming from almost every metric you can look at. Maybe that's worth discussing in a bit as well. But I want to go back to the conversation about hash rate. It's interesting. You see a lot of sort of the bigger Bitcoiners pointing to the fact that hash rate is at an all-time high as this massively bullish thing, which in one context it is, of course, because it means the network is more secure. But we're also seeing a massive flush out and just destruction of mining profitability and some of the bigger miners as a result, right? When you have an increase in hash rate alongside increase in electricity costs and competition, that's going to be problematic for profitability and make it very difficult to make money mining, right?
Yeah, 100%. I think you said it well. Like the way you can think of miners is they're basically long Bitcoin spot, which also means they're indirectly also long the price of the ASICs, and then they're short hash rate and byproduct of that short difficulty as well. And so, as you just said, basically everything, and they're also short energy costs. Basically everything that goes into being a successful miner is going against miners at the moment. You've got Bitcoin price down 70+%. You've got the ASICs miners, which are, in terms of price, they generally kind of perform as like higher beta to Bitcoin. So if Bitcoin goes up, they're going to go up a bit more. If Bitcoin goes down, they go down a bit more. Those are down somewhere between 70 to 80% depending on the model. And then all these public Bitcoin mining stocks are also down 80%. And then, as you mentioned, energy prices are up in 2022, as in everything else, as with everything else. So, yeah, miners are in a really tough spot. You can look at something called hash price, which is a derivative of hash rate and price. So basically, you're looking at the amount of hash it takes to mine a certain amount of Bitcoin. And what you can see is that value is at all-time lows right now. So, it's showing you basically as a visual for like this minor margin compression. What happens is I guess just like from a fundamental standpoint to explain for listeners, like, in a bull market, everyone wants to start mining Bitcoin, right? Because it's going up only. And so you get a bunch of these orders for these machines. They have a lag though from when they're ordered to when they start coming online. So, granted, we have like a pretty small sample size in two from 2013 and 2018. But what we've seen historically is that there's kind of a lag between the peak in Bitcoin's underlying spot price and the peak in hash rate. And that's because there's a kind of that lag between when you can order the machines, actually get them shipped to you. You also have to build out the shelf space to house the machines, all things like that. So we tend to see that lag. The issue with that is, as we just mentioned, that's kind of a worst case scenario for miners with hash rate ripping higher and price continuing to go lower. So, basically, each historical, Bitcoin bear market has kind of the bottom has been marked out by some, regime of minor capitulation. Now, granted, we're kind of on the verge of one now, but we did have one back in June. If you remember going back to June, we had Core Scientific having to sell 7,200 BTC for about 170 mil, which was
they've got 20 left.
You got 20 left. So, right. I mean, this is the good news, I guess, for us and not for Core. Obviously don't want to, wish bad on anybody, but, it seems like, Core, out of all the miners, they're the largest public miner in terms of hash rate share. They're under immense financial stress. For anyone who didn't see, in an SEC filing last week, they announced that they're on the verge of bankruptcy, filing for bankruptcy. Not sure if there's been an update on that, but yeah, I mean, they only have 25 Bitcoin left to sell, so it's not necessarily a market risk. If anything, and we were talking about this briefly before we started, as I just mentioned, there's the largest portion of public hash rate at 4.9%, I believe. So, if theoretically in the restructuring hash, came offline, that's actually a net good thing for the rest of the miners. But, Scott, maybe you have more insight into this to me because I'm not like a distressed debt guy, but I don't think in the financial restructuring, the miners will come offline.
I think they're toast. But I agree with you. I think the company is toast, I should say. I don't think that there's any viable way to survive without probably chopping it up and pulling a Richard Gere and Pretty Woman and selling off the assets. And, but I, like you, don't think it will generally affect hash rate. I think that it will be easily replaced. And now we got the news yesterday that Argo is also struggling and could potentially go into Chapter 11. Different reason. They had basically a $27 million investment lined up that fell through at the last second. So it looks like they could be following along. But I do think that's the beauty of the Bitcoin network, right? There's really no bailouts. It's a free market. Somebody stronger steps in and does it. I just hate to see it because I really like these guys. I'm friendly with Darren Feinstein from Core Scientific. I would hate to see this happen.
I do wonder where this rip in hash rate has been coming from. Like, the cynical part of me is like, is someone trying to like squeeze out the other miners? Yeah. Like, if you're some huge miner that's like really well capitalized, like, are you just trying to squeeze out all the other inefficient guys, like Rockefeller style, even if you're like temporarily?
Yeah, you take the loss because you can weather it. And I think that's one great premise. I think a lot of it in my mind goes back to what you discussed, which is that during the bull market, all these new miners were purchased. They were extremely delayed. People built the rack space and probably felt like they had to put them online regardless of what the market was like. So if you receive thousands of these miners and the price is at 19,000, it was at 60 when you ordered them, you're not going to sit on them, right? You're going to put them online and hope that you are the stronger entity. But that's just a theory as well. But we do know for a fact that there was this massive boon in mining in 21 and everybody was buying them.
Yeah. And I guess the other like non-cynical take and like hopium take would be that you have some, large energy producer that's decided to use their excess energy. Maybe they're just flaring it off or whatever, and have finally decided to plug into Bitcoin mining. I don't know which it is, but those are kind of my two main theories here.
I would imagine it's just a combination of all of them, but it is sort of speaks to the evolution of on-chain analysis that we were talking about at the beginning. There used to always be this endless debate of why price and hash rate move so closely together and which one was leading, sort of the chicken and the egg. And now we have a hash rate at an all-time high and price, 70% off the highs. So pretty much killed one of the greatest debates that we ever had in on-chain analysis, right? Sort of proves it's nascent and we're still learning.
Yeah, exactly.
Yeah. So listen, you also obviously go well outside of on-chain now. It was interesting to hear you sort of say, listen, we tried it at the beginning and now it's become more of a contextual thing than actionable day-to-day trading data. So that means you're primarily using technical analysis. And I have obviously noticed that you're aggressively trading sushi.
Yeah, look, man, I think, I'm just like a very open-minded person and I try to just, evolve my thinking as needed. And, I think it's just been clear that from like an active allocation perspective, like swing trading type things, I guess some people would consider, active allocation, like, taking a trade every like 2 or 3 years to like trade the broader cycle. But yeah, for like on-chain, it really hasn't been actionable for like, intra-month, intra-week stuff. Yeah, I definitely have found the liking to using price action, but especially in confluence with other things. Mainly, I would say breaking down into 3 things like liquidity, derivatives, and also the order books. And when you can kind of get a confluence of those things with price action, I think that's really helpful. Especially if, let's say you look at like a liquidity heat map on something like a high block or like a Kingfisher, which basically try to like estimate where derivatives positions have been opened and like where pockets of liquidity are, right? So you can look at kind of a level that's shown on there. You can also look at a level perhaps where there's a large amount of bids or asks in the book. And then you can also look at, an important contextual, area for price action, whether it's some key support or resistance, right? And so like, just in theory, like let's say price is at key support, you've got some large bids that are being filled. You've got the the liquidity delta, which is high blocks look at the difference between, in proximity to price between the aggression of longs and shorts. And then also you look at the derivatives, metrics, open interest and funding rates, and you've got, mooning open interest on like increasingly negative funding. Like that's very high confidence across 4 or 5 different tools that you probably do for little reversal. And then obviously the inverse of that, at resistance. And so those are the types of things that I really found useful. And yeah, I guess to get into sushi, like sushi's been trading extremely clean. I've been trading shitcoins not as long as you, but I've been trading shitcoins for, I would say, like a good year and a half now. And sushi's been extremely efficient in terms of it's been squeezing all the liquidity out to one side. So, it'll hook in a bunch of shorts, squeeze all the shorts on the way up, distribute into the late longs, and then rinse all those guys until the last late long is rinsed out, and then squeeze it right back up once shorts are hooked back in. And it's been trading in this very clean daily channel. So, it's done this
long the bottom of the range and short the top, and keep going until you're proven wrong and you stop out on that last one. It's like it's one of the more obvious strategies. Yep.
And I think it's one of the few coins that I would say has a narrative in this market right now. There's really not that many like thematic narratives, which in my opinion, like I view like the altcoins very cynically. I think they're just speculative vehicles with like a little, there's some underlying like technological, improvement with these things and like innovation, but in terms of how they trade, a lot of it's just narrative and like thematic things. And then you just tie that into like, is that being reflected in price action? And then you get that, feedback loop between the narrative and price action. And I think for sushi, like the underlying narrative right now has basically been for the last month that there's like a sushi turnaround narrative. So they brought in a new head chef in Jared Gray, Cumberland and Golden Tree both backed sushi. Golden Tree has like a $10 million position according to the on-chain wallet that I have tagged. And they've added to that multiple times over the last few weeks. And so, I think the way that I'm thinking about this is like, if they do one implementation, if Golden Tree pushes forward one protocol implementation, set a new roadmap for the protocol or whatever it may be, market participants are going to extrapolate out more changes, right? So I think like the big thing with altcoins is like, and you see this with things like Cardano, right? Like I've never traded Cardano, but like the reason why Cardano ripped higher is because people had expectations of something actually being done. And so like you get this like very cynical take with altcoins where like actually delivering on something is like the most bearish thing that can happen.
You just got to keep the hype going. And that's not a statement. I make no statements about Cardano specifically, but you're absolutely right. Once there's an actionable product and people kind of lose interest because you don't have the buy the rumor, sell the news event. You just keep buying the rumor.
Right, exactly. And like with sushi right now, they've yet to release that, first kind of implementation or, protocol roadmap. But I think once that is released, then you'll have market participants extrapolate out, 2, 3, 4 more changes because, not only has Golden Tree said that they're going to come in and, try to turn things around, but now you actionably are seeing, a protocol implementation being made. And so that's kind of been my thesis as to, why I've been bullish over the last few weeks.
Yeah, I actually have Jared Gray on the roundtable tomorrow, and we're doing a DeFi roundtable. So interesting that you bring up sushi today, but I'm interested to listen to it. I just brought up the sushi chart real quick and painted out that channel so people can kind of see what we're talking about here on the daily. That gives the general idea. There's a couple comments over here. Hugh says on-chain has been garbage for months. I think you could argue that inside that all analysis, on-chain, technical, otherwise, works primarily in trending markets and doesn't work particularly well when the market is chopping sideways. So I don't think that's unique to on-chain in this case.
Yeah, I think that's fair. I also think like a lot of these valuation metrics, are just in these levels where I think it's like a good time to be accumulating heavily. A couple of them like the market cap to realized cap metric we talked about, short-term holder cost basis relative to long-term holder cost basis. I could pull that up real quick, I guess, to give.
Sure, if you've got it, that'd be awesome.
Yeah.
And I love your point while you're doing that about finding that liquidity and the liquidations. Zoran and Trip ISO, who's an old friend of mine, put me onto that quite a long time ago, and I'm always impressed with how they use those and how accurate they can be for the liquidations. That's from High Block, right? I mean, that's primarily what they do. Here you go. Here's
ISO is great with the heat map for sure. They were. I remember when Zoran had like in his bio like liquidity theory. I was like, what does that even mean?
Yeah, I mean, they somewhat created it, and they built that entire course, and just they're great guys. And I've known Triple a very long time. I saw he's really a great trader. So they kind of put that on my map.
No, yeah, 100%. Cool. This is so this is the on-chain cost basis metric. It looks at the short-term holder cost basis and the long-term holder cost basis. So the premise here is that whenever the short-term holder cost basis goes below that of long-term holders, it's a good signal to accumulate because short-term holders have capitulated out of the market. So if you look, this was the first cross here in 2011, basically marked the exact bottom tick. Here's the one in 2014, which basically coincided with the exact bottom tick. 2018, a few days after the bottom tick, and then recently we've been in this period of cross over the last 3 or 4 weeks or so. So this, in my opinion, while this green shading, which means that the short-term holder is below the long-term holder, that indicates a good time to accumulate. But for those who are kind of waiting for confirmation or more, I guess, momentum oriented, I think what you can look for is the cross of the short-term holder cost basis back above that of long-term holders, which you see here. You see here, you see here, and we've yet to see currently. So, of course, you're missing the bottom slightly, right? Look at
God forbid you don't buy the dead bottom.
But you're basically paying the price for confirmation. So, I gotta say that's kind of the actionable way you can think about using this. But something like this, sure, it's not super exciting. It's just telling you it's a good time to accumulate. But again, I think that's kind of where the value in terms of on-chain has been, is for kind of people who are, I would say, like swing hodlers, if that makes sense. People who are kind of like swing trading the broader
trading
cycle
around their core position. Sure.
Right.
Yeah. So, I mean, I guess it's a good time to ask you before I let you go. I know we're running up against time then. So general thought on the market here. That appears to show that we are bottoming. My opinion, I mean, when we hit that bottom in June, I said, nobody knows the future, but I said, I think that's the bottom, right? And if we go lower, I think it'll be one of those major capitulation wicks, could be because of miners, something like that. But I feel like we are bottoming, and bottoming is a process, not really a price, right? So do you agree, or are you in the we're going to 10K camp?
Look, man, I think, first of all, according to a lot of the on-chain related stuff that we just looked at, I think we're in an area of value. I think the order books are also showing that as well. If we look at, several like the major spot books, if we look at like Coinbase, Binance, you're seeing pretty heavy demand, especially on Coinbase, from like 18K and below.
We all have bids, right? I mean, literally, I'm not expecting them to fill, but I've bid every $1,000 down to like 9, of course, because if it happens, I'm going to be there. Yeah,
and it's like, it tends to be the case that like when everyone wants to buy a certain level, it tends to kind of get front ran a bit. So I would say, like, if we did, as you just said, like, if we were to wick down there, I would expect it to get bought up like very quickly because there's heavy demand in the books there. But I feel pretty constructive, also when we look at like everything that's overhang from, above the market from, World War III and nuclear war being imminent, and, like kind of the worst macro situation in the last 3 to 4 decades, I guess, aside from 2008 and maybe the early 2000s. I guess some could argue that this is worse because it's like a total sovereign debt crisis.
But I think it's worse because it's not simply one thing.
Right.
It feels like it's everything. Yeah.
Yeah. And like, in the face of all that news, Bitcoin has still held 19K. This, magical internet money has still held 19K. I mean, I think, thinking about what would have to take it lower, it would have to be some major credit crisis or correlation to one moment, which, if that was to take place, though, I would expect the Fed, if you had like a, dysfunctioning of the treasury market, I think the Fed would step in and at least temporarily, fix that, which would provide relief to Bitcoin as well. So that's kind of my thinking. And, I've been averaging in, slowly every time we get towards, the bottom end of the range. So, yeah, I mean, I remain constructive. The other thing as well is, my time horizon on the buys that I've been averaging in, I do a fair amount of, trading with something like a shitcoin like Sushi. But, with my Bitcoin buys, these aren't buys where I'm looking to, sell at 28K or something, right? These are, multi-year type of buys. So, my risk tolerance and my conviction in like the long-term picture for Bitcoin and like what's on the back half of this Fed tightening cycle and what that'll catalyze for Bitcoin, if I'm buying here at, 18, 19K and Bitcoin drops down to 15 and wicks down there, I mean, that for me, that's, I'm not going to really, feel a thing or like, be severely underwater to the point that like, I'm like not being able to sleep at night,
How old are you?
I'm 20.
Yeah. See, I'm 45. So obviously it's different. But when I was 20, I was a complete degenerate loser. So it's wonderful to see that there's actually 20-year-olds in the world right now who have a long-term view and are intelligent and investing, because that took me till long after I was 20 to actually have that level. But even for me, I'm 45 and I still view it that way, right? If it happens when I'm 80, great for my kids, right?
Yeah. No, 100%. Yeah.
Yeah, that's always been my approach. Well, I know you've got to go, man. I really appreciate your time and you being on here. I've been following you for a long time. Everybody, it's Will Clemente III or 111. What is your where's your Twitter?
It's III. Yeah, I'm the third. Yeah. So
he's the third. What are the first two doing right now? Are they on-chain analysts?
No.
I have a feeling Grandpa might not be.
Yeah, no. Grandpa just got moved into a retirement home, so his on-chain career.
On-chain days are over. Maybe now he'll have time to really dig into the metrics. Well,
yeah,
guys, everybody follow. Is there anything else anywhere else that people can check you out or find your information or follow what you're doing?
Sure. I guess just to plug a little bit, just recently launched this venture, Reflexivity Research. We're a dual arm entity. On one side of the house, we have a prop trading desk. On the other side, we sell research from everything from DeFi, Bitcoin, fundamental Ethereum analysis, and global macro. That's not all done by me. I have a team of really smart people who are smart where I'm not necessarily strong. So, if that's something you're interested in, be sure to check that out. If not, I post a lot of my thoughts on Twitter. And aside from that, thanks a lot, Scott. I had a lot of fun.
Thank you, Will, man. And everybody, please give him a follow and check it out. I'm going to let him go, and then I'm going to answer a few of your guys' questions. Then we'll get out of here. Thanks again, Will. Appreciate it.
Take care, man. Thank you.
I just see that there's some questions over here, so I'll try to get to them and not you can ask me. How come we are bottoming if macro is getting worse? I think it's debatable whether macro is getting worse, honestly. You have to remember that macro getting worse is really about the perception of what could happen versus the reality. So it's about expectation. I do agree that the world is getting worse, but everybody now expects the world to get worse. They expect the 75 BIP rate hike today. By the way, that's coming in 4 hours. We'll see what the Fed's going to do. They expect a 50 hike potentially at the next meeting, and then they expect it to wind down with potentially 25. So anything that's not worse than that will actually be viewed as good news or sideways. And as Will made the great point, Bitcoin's chopping sideways while all these other things are dropping, while currency markets are breaking. That's actually a good sign, because people seem to already forget that historically Bitcoin has been an uncorrelated asset that has offered idiosyncratic risk. And we have this correlation increase when markets are bad, but all assets become correlated during the dump. And then you see when they decorrelate, which are going to perform better. I talk about it all the time, but you go back to March of 2020, very obvious that the asset you wanted to be in when markets bottomed, and by the way, in March of 2020, everyone thought that the stock market was going to go much lower than it did. There was disbelief. But what asset do you want to be in? You want to be in the one that doubles, stocks, or you want to be in the one that went up 17 times, crypto? So I think that now, if you think there's a chance we are bottoming, it is a good time to buy, even if it goes lower, because your upside is so much more massive, right? You guys may not remember, but in March of 2020, when the stock market bottomed, April and May were the worst performing months in history for hedge funds, because there was so much disbelief that the market was actually bouncing. Everyone thought it was a dead cat bounce. Everyone thought that it was a bull trap. And the market just kept coming up. And hedge funds, the smartest money, the biggest money on Wall Street, absolutely got slaughtered in what was arguably the best possible moment to make money getting long any market in history. Maybe the bottom of the Great Depression, bottom of the Great Recession. But if you got long stocks and had conviction that was the bottom and followed the signs that started to show that it was the bottom, instead of being emotionally bearish because of COVID, which was fair, that was most people, then that was the buying opportunity of the century. But what were hedge funds doing? Because they're supposed to be hedging, they were shorting it and getting absolutely crushed and going out of business, right? So and Thomas makes the very good point. The economy is different than the market. You could make the argument right now that the economy is not weak, but markets are. I'm not making that argument necessarily, but even today we saw more. There's a hell of a lot of people who have good paying jobs right now, right? So it depends on what metric you're looking at, but obviously the Fed wants to crush demand. They want to kill jobs. They want people to get paid less. They want the housing market to come down because that will give them the excuse to eventually pivot. Coco Dice is asking me my opinion on the SPF and Voorhees debate. I hate to admit I didn't watch it. I went about my life. I don't watch many things, to be honest, but it was like it's been a busy couple of weeks for me. I've been traveling like crazy and I missed it. I mean, at the core, I think both of them have very good points. I think that I like Voorhees's idealism and he's correct about the principles. I also believe that there is a level of realisticness and pragmatic thinking that we need to have because regulation is coming, whether we like it or not. Whether you think SBF is the guy to be pushing that narrative, I think it's fine. Personally, I like him a lot. Is up to you, but we need somebody there with a voice so that it's not just a bunch of political boomers who know nothing about this market regulating and legislating around it. So you can choose your white knight or your champion. Bitcoin doesn't really need one, but we definitely need to have a voice, and we definitely know that the regulation is coming. So when regulation and legislation come, what you hope to get is a reasonable compromise and not an exceptionally one-sided policy. And I would say odds are without the crypto industry lobbying and without people like SBF out there, we will get something that mimics legacy markets and makes very little sense for DeFi. This is going to be the topic tomorrow, to be quite honest. Right? This is going to be the topic tomorrow. We're talking about literally the topic tomorrow. I'm zooming back for exactly what we called it, but it's basically the United States government versus DeFi. We're going to talk about the context of what DeFi looks like in a regulated world and what that regulation will mean. So we're going to talk about this exact topic a lot more tomorrow, and I'll do my due diligence in advance of that. We're going to have Jared Gray, the CEO of SushiSwap, Julian Haas, the co-founder of DeFi Chain, and Nicholas Ramsrud, the CEO of Kadak. I think that's how you pronounce it. Right? So we're going to have three experts who are working actively in DeFi and see what they have to say about it. Yeah. Tigalima wants to know if I got some charts. I mean, listen, I guess you can get excited about this, but this is Bitcoin right now. Like what are we doing here? Nothing, right? Everybody got super jazzed about a rise from 19,100 to 21,000, but we've been between 17 and 25 since June, and I don't see any reason for that to change. But in general, I think that this was a more bullish move than bearish, and that things are kind of looking up. But like, what charts are we going to look at right now? What are you going to look at? Doge hit resistance. SHIB, I don't know. ETH still looking pretty decent, kind of flagging actually. I don't know. Let's look at the 4 hour. That's ETH versus Bitcoin. I've been saying looks good. I'm going to draw this. Maybe it's not there, but yeah, I mean, that's pretty compelling. I'll be honest with you. That looks like a very nice bull flag, and I would say that Ethereum is poised to outperform, kind of doing something similar on the USD. But listen, ETH Bitcoin, I've been saying for quite a while here that it's looking like it's going to wildly outperform, and it has been, but it might just need to cool off a little bit. And check this out. Right now, there was no bearish divergence, even though it went to overbought. And what you're getting forming now from this low to here is potentially hidden bullish divergence. If we see an elbow up here on RSI, and we see RSI start to rise, we'll have hidden bullish divergence, which is a sign of continuation. Yes, we're already overbought, but never underestimate how overbought you can be. I mean, check out Doge. Doge got to 93 on RSI. Some would argue, yes, you're going to top eventually in overbought, but trying to time when that's going to happen is very hard. That's why I like the bearish divergence, because people like Big Cheds would argue that when you get to overbought, that's actually when you're hitting the power zone, right? That's when things are just starting to get bullish. Yeah. So interesting. But yeah, I don't, we're going through these charts. Amazon getting smoked. I'll probably buy some more of that, to be quite honest with you, because long term, it's Amazon. Dollar hanging around, USD JPY hanging around, SPY hanging around. There's really not that much to see, in my opinion, right now. So hard to give you any actionable information. It is what it is. Can't stop that. Scott, what are your thoughts on Elon buying stocks and his intentions? Honestly, I didn't even see it, so I don't know. I don't know. Mir says, great show. Thank you. Yeah, Will was a great guest. Gave me a lot of context. Green Cap Abe says, father-son vibes. Yes, he could be my son. He could be my son. Just scrolling back to see if there are any other comments here worth approaching. But otherwise, I think we're wrapping up. I didn't tell you guys about BITGET before, did I? Right down there. They're running a promotion right now. You can get some extra free money by just depositing. I should tell you the Discord is well on its way. I will remind you guys, listen, I found a community manager, which is awesome. We've built out a Discord. I'm going to need some of you guys to be the first people in there as the guinea pigs to test our concept and see if what we got is good. But I actually still need to hire more people, community managers, but I don't have brilliant people to contribute content, and I'm going to be very busy. It's going to be hard for me to do that myself. Of course, some analysts to share charts and things like that. So yeah, we got that going on. But yeah, I'm going to start a free Discord channel. To avoid having it be a complete shit show, we'll probably just, the plan is that all you'd have to do is sign up for BITGET. You don't need to trade, do anything, but at least it gives us some sort of metric to make sure that it's not just trolls and people have to do something actionable to get in there, but you don't have to actually trade or do anything like that. Yeah. Where did we apply, Scotty? Drew, you're in there. We got that. We got that. BC in the Matrix says, I got lots of free time to help. I got to figure out a way for you guys to contact us. My DMs have been off on Twitter for a very long time. We'll figure that out and I'll get to you. I don't want to say anything stupid right now and then open the floodgates and have 1,000 people spam me. So, but yeah, I'm going to need your guys' help, and I can find no better place to start than in the community and those of you who have been here for a while. So would be nice. Yeah. Yeah. Email. We do have, email. I'm trying to think what the general email, info@thewolfofallstreets.io. Oh God, I just said that. info@thewolfofallstreets.io. That's where you can spam my assistant. Yeah, just give me your phone number. We call you. It's 8675309. 8675309. Yeah, welcome to the Melkerverse. Guys, that's all I got for you today. But I hope you see that we are always trying to improve here, always trying to offer more free things, more education, more information for you, and hopefully, yeah, it's good. Anyways, call Mike Jones. See you guys tomorrow, 9:30 a.m. Eastern Standard Time. You're going to be there, right? You're going to be there. You're not going to leave me like alone, are you? That'd be weird. That'd be weird. Yeah, we're going to Discord soon, guys. Get ready for that. Peace.
That's dope.